Welcome to the panel on mortgage financing in a non-Islamic world. Before we begin, I just wanted to tell a very brief story dealing with this topic. The other week I was talking to some people who work for the organization Habitat for Humanity. I don't know if everybody's familiar with that group, but it's a charitable organization that builds houses for people with limited incomes. And part of the way they operate is the person who's receiving the house has to help build the property. And they use a lot of volunteer labor. Interestingly, they use a form of mortgage financing that might fall within Islamic financing principles. When they build a house, they have a portion that they have to pay for, a portion that they get donated from various companies, the materials, and a significant portion of the labor that is donated. So ultimately, when they provide the financing for the house when the person moves in, they take what the market rate of the house would be, less the donated labor, and that is roughly what they charge for the house. But because they're only out of pocket for a portion of that, because much of the materials were also donated, the loan that they provide to the buyer of the house is just the principal portion, and there's sufficient profit built into the structure so that Habitat for Humanity's costs are covered. And the funds that they provide, that they have to spend on the house themselves, are from their coffers, not from bank borrowings. So it's a very interesting model. I don't know if it would fit exactly within Islamic financing principles, but it is fairly close. And then they said as a result, they actually have quite a few Muslim clients in the Ottawa area, where actually I should note is where I'm based, the same as Guy. Our first speaker on this panel will be Guy David, who recently completed the report for the CMHC, and I'll hand the mic over to him.
Thank you, Lorne. I'll just start by saying that although our firm did complete that study and report for CMHC, I'm not here today to speak on behalf of the Canada Mortgage and Housing Corporation, and nor do I intend to present the report itself. The report speaks for itself. It's in depth, and I urge you all to download a copy from the UFANA website or from CMHC. What I'd like to do is just share with you some observations that came out of the work that we did in our research that might not be articulated as such in the report. And these are more my personal views from having studied this topic. What we set out to do when we did the report was to analyze Islamic housing finance in a sampling of countries around the world. And we tried to find countries that would have that would have differences so that we could put them into categories. So we looked at Western secular countries with minority Muslim populations, such as the UK, the US, Canada, Australia, New Zealand. Then we looked, because of the civil law environment in Canada as well, in Quebec, we looked at civil law countries that were also both secular and Islamic. And then we looked at Islamic states, both with common and civil law traditions. We looked at the GCC, Pakistan, and we looked at predominantly common law as well, Malaysia, and as well as civil law, France, Algeria, and Turkey. So this gave us a good framework from which to work. And what we found is that different jurisdictions obviously have different structures, but we found that there was something unique about home finance that both from the regulatory standpoint and from a lot of the social legal instruments and social values that really informed housing finance more than it might inform capital markets instruments, for example, or other types of retail finance. That goes back maybe to what we heard this morning, that housing is unique among human needs, and therefore everything that surrounds housing is very tied to a particular people, their culture, and the state in which they live. So in this sense, I guess one of my high-level observations is that Islamic housing finance differs significantly from other areas of Islamic investment and finance, and it's really more closely linked to domestic policies and politics than other things. So what did we find, or what are some of the conclusions? I guess one of the most startling conclusions or pieces of data I came across was in the UK, where you have had very good accommodation of Islamic finance. You've got the FSA has taken an interest in it, and there have been some legal and regulatory changes to remove, I guess, impediments on banks making Islamic mortgages under their capital adequacy ratios. Despite this, the take-up rate that we found in the UK, based on, these are 2007 statistics, I believe, was that 45/100ths of 1% of UK mortgages are Islamic mortgages. That's 0.045% of all the UK mortgages. And it's a 1.1, or at the time it was a 1.1 trillion pound industry. And to me that was quite shocking, actually, that the take-up rate wasn't higher than that. And interestingly, the take-up rate did not, we thought there might be clusters of Islamic mortgages in the north, and that didn't turn out to be the case as well. In the U.S., we found that the U.S. has attained critical mass, the critical mass needed to have a vibrant market, and it does. And one of the things that I guess we drew from that is that once you get this critical mass, at least the product can survive, it can become vibrant, it can become profitable. But there are other factors that were necessary to make that happen. And in the U.S., I think the most important factor, that at least my own personal view, is that the involvement of the quasi-governmental housing finance authorities, Freddie and Fannie, is probably one of the single most important factors why there seems to be a bigger take-up rate in the U.S. We found interesting, this comment was made this morning earlier too, that in several, take France for example, with the largest Muslim population in Europe, 7 to 8%, there's virtually no Islamic housing finance. That's partly explained by a fatwa that really invited people to, said that you could take out conventional finance if no Islamic housing finance is available, but also it may be part of the French preoccupation with separation of church and state and secularity. Algeria was another interesting one, with a mostly secular republic, but a mostly Muslim population. The finance and banking authorities are very, very concerned on maintaining the secular nature of the country, and have refused, despite strong lobbying, to make changes in bank regulations that would allow Islamic housing finance. I'll try to move along a little faster here and talk a little bit about what about the experience in Canada. Before that, I'd say there's several countries that I would group together, the GCC, Turkey, for example, mainly the Middle East, where there's very little development in Islamic housing finance, other than in Turkey, where it's an informal sector, it's not institutionalized. And this, I take it to be because housing is very tied to society and culture and national policies, and it simply has not, the institutions that are there do not rely on Islamic housing finance to support housing.